Welcome back to Golden Rule Radio. Gold's trading right around 1710, 1712 today, Wednesday as we're recording. It's softened a bit since last week, and so let's jump right into it.
Sure. I mean, we had that nice breakout against that bigger compressing pennant, jumped up, tested the old highs. I think that definitely takes out any potential standing orders, sell orders you may have there. And then we've kind of bounced down in a neat little channel, been kind of clean coming on the way back down. So eventually we'll run into some RSI divergence or some previous pricing levels here, maybe in the 1680 to 1700 mark, see if we get a bounce there. But yeah, I think gold's doing pretty much exactly what you'd expect. Take out the old highs, come back, rebuild, reload, get ready to fire again.
Yeah, those are good entry points for me. 1700, and I said this to one of my clients yesterday, and he was able to position this morning. 1680, if we see it, another good entry point based on this channel and hitting the floor of that story of the building.
Yeah, we started the month right about where it looks like we're going to finish the month. So May seasonally being about an average 0 to maybe even softer month for gold, doing exactly that. June also looks like a month where you need to be acquiring gold leading into the end of the summer, beginning of August. So coming up on June, here we are. This is a good opportunity to be buying at a little bit lower prices than last week. Maybe we soften into the 1600s. We'll see. So be ready to pounce if it does pull back into the 1680s, maybe 1650 range. That may be all you get.
Yeah, I think that's great advice, not only seasonally, but remember that we're in the middle of Q2, and come July, you start getting Q2 numbers. The economic numbers will start rolling out, and everybody knows it's not going to be pretty, so be on the front end of that.
Yeah, this past couple of weeks, it's been a little bit more of a risk-on trade. Stock market up, gold kind of softening or flat, and stock market has definitely jumped up above that 618 retracement level that we've been talking about the last few weeks. And so it's above the 618 retracement. We saw the Dow Jones Transportation Average push up above the 50% retracement. So point of that is it's been a risk on equity jump here. I mean, gold has just kind of softened and been flat.
What about silver, Miles?
So silver, if you back out and you look at the longer term charts, you can kind of see we were starting to hint towards higher prices. We talked about this last week, where really you need to see silver up in like the high 20, low 30s to percentage-wise match what gold has already done. So earlier this year in March, obviously we had the big drop in everything. Silver came all the way down to the low end of that long-term trading pennant. However, we've broken firmly above it now for the second time. We did it through 2019. We've done it again now in 2020, and we're sitting just a bit under $20 an ounce. Where are we? 17 and a quarter, I think, Wednesday afternoon. So it's good to see silver starting to build up a little bit of momentum, possibly play catch up here with gold and what gold's already done. Gold is the tide that raises all ships, and silver and platinum, I think, are the ships that are coming with it.
Yeah, we talked last week about that ratio coming down to 99 to 1. Nothing's changed here. We've been hovering between 99 and 100 to 1 on that gold-silver ratio, and still certainly in favor of silver regardless of what the spot price is doing. It's all about the relative price.
Yeah, isn't it fun to talk about silver at like 1725 and gold at 1725? It's just 100 ounces away.
No calculator needed.
Just move some decimal points.
That has been kind of funny to be quoting silver spot and gold spot if you don't use the decimal point at the same number.
That's right.
But anyway.
Well, what about the other white metals, Miles? Are you seeing the same sort of activity, platinum and palladium-wise?
Yeah, I mean, platinum came up, and we talked about this last week. Platinum came up in testing the previous floor from back earlier this year. Go back to February, we had a pretty defined floor until March hit. Came all the way down to like $600 on platinum, and now we're back up in the low 900s, high 800s. So we came a little bit below that floor at around 860 and have turned back down. We've made a couple little bumps down. It also looks to be compressing a little bit. So I'd expect platinum to make a decision here in the next probably week if it's going to go up and try for that 960 number and actually touch that floor, which I think is most likely. And rounding out the white metals, palladium continues to trade sideways here after its gigantic fall of over $1,000, sitting now, just a little under $2,000, And I think we're still trying to see what palladium wants to do. Is it going to come down to tighten that ratio? Are they both going to start climbing and platinum just doing better? But for the time being, and as Robert alluded to a moment ago, the idea of moving into the summer doldrums in the markets, not just the metals, but all markets across the board tend to soften and calm down a little bit. So we could be sitting at platinum here in this 2,000 range for probably the next couple months, maybe up or down $100, but I don't see it taking off anytime soon.
Yeah, I'm not touching it with my portfolios. Too much volatility, too much uncertainty, unpredictability. It's just all over the place. So stay away from palladium would be my recommendation. Same thing with probably the U.S. dollar. What do you guys think about the dollar?
Right. Well, and that ties with what you were talking about with the equities earlier. You know, the risk on trade is you've got money coming out of safe treasury bills going back into an equity market, pushing that equity market back up, and that's causing the dollar to continue to not really go anywhere but down.
Yeah, we're still at 99 on the dollar index. We crossed below it just for a fraction of a minute there. But remember, we're coming off a 17-year high of 102. And now to break down below that 99 and see if that'll hold or not touching that either. At some point, the inflationary measures they've taken are going to rear their heads, and that dollar will turn down. Just look at 2009-10, and you have a good example there. And speaking of inflationary measures, Japan is jumping on board. They now have exceeded $2 trillion in their central bank stimulus, or their government spending, really. They are now twice 117 trillion yen stimulus packages. That's equal to $2 trillion US dollars. And Abe says we must protect business and employment by any means in the face of the tough road ahead. And also, we must also take all necessary measures to prepare for another wave of epidemic. Well, therein is the speaking point of every central bank around the world, including the Federal Reserve. So get ready for increased stimulus. It shouldn't catch us off guard.
So, Tori, I think it's worth keeping our eyes east with what's going on over with China and Hong Kong.
Oh, man, that is the understatement. You've got totally increased tensions with China and Hong Kong. The protests, they've now made 300 arrests. They're trying to squash and not have a repeat of what happened in the fall. But this time is different. The CCP's boot is getting bigger. And Pompeo told Congress that Hong Kong is not independent from China any longer. Here's why that's key, because Hong Kong has had favorable status, but they've had to be proven to be sufficiently autonomous from Beijing. So what Pompeo's saying now is that because Hong Kong is essentially part of China, even though they have a different legal and economic system because of the fact that they were a British colony, really what you're seeing now is that the U.S. can place sanctions and no longer trade with Hong Kong in that favorable status because they're now going to be lumped in under Beijing. So really keep your eyes on what's transpiring there. These people are fighting desperately to maintain sovereignty from Beijing, and it looks like they're in a losing war. So there's no question that rescinding Hong Kong's special status is going to be interpreted as another economy attack by Washington against China, and we're getting this tit for tat back and forth with Trump and Xi, but this is a law that was passed last year, and I think they saw the writing on the wall. You don't only have China and Hong Kong, you also have Israel. So they now have plans by July to annex large portions of the West Bank. That's going to be very, very inflammatory. And you've got Russian jets, fighter jets, that basically intercepted U.S. Navy patrol plane over the Mediterranean. That's the third time since April. You can see the video online. A lot of poking the bear, if you will, going on right now.
Well, when you poke the bear, you're going to be poking the bull market in gold. That's just what's going to happen. So that does it this week for Golden Roll Radio. Thanks for listening. You can follow us on Twitter at ICA Gold, like us on Facebook, McElvenney Financial, our website, McElvenney.com, or call us at 800-525-9556.
Thanks for listening. Have a great week.